Welcome to Unaccountable, the world's okayest accounting game show podcast for product news, updates, and education. I am your New Heights host, Tyler Otto, and I'm joined by Call Me Daddy, Jeremy Van Grohl, who wrote our introductions this week, might add. I mean, if I didn't know what New Heights was, I'd be very concerned of what you're writing for yourself. But do tell, why these intros this week?
Maybe I just wanted you to call me daddy, Tyler.
Wouldn't be the first time, definitely not the last.
That's right. No, I did. Like, if you heard in the last couple weeks, both the New Heights one, which are the Kelsey brothers, and Call Me Daddy, which is Alex Cooper, both sold their rights to their podcast to Amazon and I think Spotify for like $100 million and $125 million. So I feel, Tyler, like we should have goals.
I feel like we should. I mean, I feel like we're more likely to get sued for $100 million than be valued at $100 million. But, you know, either way, we got to have goals. Jason Kelsey, man, what a teddy bear. Like, that's my man crush right there.
Yeah, I'd like to snuggle him. And, you know, it is fall, so we're getting into all the fall things now, right? Football starting this weekend. Also, the pumpkin spice craziness is upon us.
Oh my gosh.
So Starbucks came out with their pumpkin spice on August 22nd this year, which happens to be my oldest son's birthday. Extra bonus point to start out the episode. How many days earlier is that than their original rollout of this 21 years ago?
I'm going to guess a full 30 days.
49 days. It came out in almost mid-October originally. And now it is, you barely get past the middle of August and we're pumpkin spice everything.
Oh my gosh. Like, so the Ugg boots are coming out early and gosh, I'm not ready for this time.
Yeah. Love me some sheepskin.
Do we have any accounting merit in the news or are we about to get canceled from Earmark already?
Oh, maybe. I don't know. We're always just a hair away. No, other things that come with fall, right? Budget season, right?
Bane of my existence back in corporate world.
Oh, yeah, I agree with you. Like, suddenly, here it is. It's beginning of September. We'll close the August books and let's get rolling. So right now, how much do you do regarding budget season stuff with your clients?
Except for one fractional CFO client, none, because I have that much PTSD. I have told clients, like, you want budget services? You are paying through the nose. And so essentially it's in my proposals to let them know it costs so much, you can't afford me to be your budget person. Because clients think, oh, it's this easy thing. We're just going to crank out a little budget. And so you're like, you know what, we'll do this super simple. And then they want to go even more detail and even more detail. And then it's like, well, what if we change this? And then at the last minute, they're like, well, I know we've been serving hamburgers, but what if we start doing taxidermy as well? And now they want to build out a whole new product line. And not taxes. You heard me right. Taxidermy. Like, it's just, maybe that's where they source their meat from. I don't know. It's a complimentary business, but I avoid it like the plague. But something tells me, Mr. Nonprofit, you're doing this for your clients.
Oh, yeah. It's a necessary evil for us, but it's like we make them pay for it, too. There are small organizations where we put it together and kind of work with it. And the benefit of that is like, hey, if we're engaged to do that, I can actually provide halfway decent commentary on your variances actual to budget because I know what's in your budget. You can't ask me to do that of like, why are my amounts so different from our budget? I don't know. You did that behind, shrouded curtains. So you need to tell me what those numbers are.
What does your budgeting process look like with your clients? Because I'm used to super insanely complicated Excel models or IBM products that are way overpriced that still require someone with a PhD in mathematics to be able to work. What are you guys doing with your clients? Or do you just, revert to the standard dartboard method?
No, I don't think there are dartboards involved so much, but we do not do anything exceedingly complicated in most of the time, right? We have 2 or 3 CFO level clients where we're in there and we're figuring out all the things. The other one's really just a good Excel model where we pull out their current budget for the current year, do a real loose forecast on how we expect the current year to end out, and then use those numbers to drive what we think the new budget would be. And normally, like I tell them, yeah, you need to tell me revenue, right? Like donors, what are you doing out there? New grants, anything that's going on there. If they have a larger workforce, like we need to talk through some details of payroll, right? Like, are you going to add people, subtract? What's your cost of living increase going to be? any raises, etc. I'll build that in. And then I'm like, if anything else, if you don't know there's any other significant changes, let's throw some kind of inflationary thing on all your other general expenses and let's call it good, because that's not moving any needles. And the board of directors does not want me to spend 20 minutes trying to talk through $500 charges.
See, I think that's the beauty for you, though, is all your nonprofits have board of directors that they're accountable to. I have owners that, you know what, they're happy with the budget until they, on a whim, decide that they're going to buy 6 camper vans and put them on site. And they're just like, yeah, I know that messes up the budget, but we want it to be accurate. And then they want a revamped budget in May, and then they want a revamped budget in November. And it's just like, no, like I'm done.
Yeah. And I've straight up told boards like, no, we do not rebudget. Like, you have a budget, you approved it. We have documented, if we were involved, what those assumptions are. Now we are going to roll with that. And I can tell you why, because I was part of that process, why numbers are different. We don't rebudget it. And if you want to reforecast something, here's my next charge that's going to be included in that process.
I love that. Actually, this might be the moral of the story for the average listener, is don't get into budgeting unless there's a board of directors that they're accountable to, because then they don't change it on you. Otherwise, they go willy and they go nilly.
Yes, they do.
Well, Jeremy, we get to jump to our first game this week. And I'm not even excited for the game. I'm just excited for the title, which is Otto Ought to Know About Otto. Yes, Tyler Otto is going to quiz Jeremy Van Grohl about auto expenses, what is allowable and what not. I mean, come on. Otto ought to know about Otto. That's my best work. I'm retiring now.
I like it goes back to my Otto's Otter Farm. I feel like that was really well done too, but it's pales in comparison to this one, Tyler.
Thank you. People think that I am a great accountant, and no, I'm not. This is all I bring to the world is puns. Well, Jeremy, we're going to run you through 6 questions, see what you know about automotive expenses and what's allowed in accounting and what's not. All right. How do you feel like you're going to fare, sir?
Pretty average on this one. Like, I'm a pretty straight, like, we're going to do mileage. I'm going to cut you a check, and that's how I deal with it. I don't go beyond that. So it'll probably be 50-50 at best.
I love that method. All right. Well, question 1. The IRS allows businesses to deduct vehicle expenses using which 2 methods? Do you want multiple choice, or I think you can do this on your own?
Oh, no. No, I think I want some multiple choice on this one.
All right. Is it A, actual and variable? Is it B, actual and mileage? Is it C, mileage and estimated? Is it D, mileage and variable?
It's got to be actual and mileage then, once you started throwing them out there. Yeah.
Well done, sir. Yes. Only 2 methods out there. For those that don't understand, the IRS lets you expense your vehicle expenses one of 2 ways. Either A, through standard mileage, which you basically just record your mileage for the business and then get reimbursed 67 cents every mile. Or B, you get to record all the expenses, all the vehicle maintenance, repairs, tires, gas, everything that goes in, car cleanings, if you will. You get to expense bikini car wash. Yes. Jeremy, maybe that's our next new venture. Ooh. Put it in the budget.
Love it.
Now, the actual method brings with it its own controversy. We'll dive into these deeper as we go through, which in question 2, if you plan to use Section 179 depreciation to speed up the depreciation of your vehicle, which method must you use, actual or mileage?
Ooh, I'm going to think you'd have to go actual there because the mileage would have that built into it.
Yes, sir. Yeah. Yes, the mileage is just, you get to take the mileage. That's it. There's no other math done on the backside. You just need to know what you're getting reimbursed. Whereas on the actuals, you can take depreciation, lots of other stuff, but there's rules that come with it, which we'll get into later. Question 3, Jeremy, keeping a mileage log of all your vehicle miles, including odometer readings at the end of each year, is crucial when using which method? Actual, mileage, both, or neither?
Oh, this is all sorts of trick question. I'm going to go mileage, both.
The correct answer is both. And dare I argue, this is where clients get so upset because you tell them when they're going to get reimbursed at mileage rates. You say, great, provide a mileage log. Show what miles we're reimbursing for. And they're like, well, I don't want to do that work. I'll just do actual. And that's when you say, great. Show us the miles that are business related compared to your odometer reading, and that's the percentage. So if 75% of all the miles for the year are business based, you get to take 75% of all expenses. And then clients are like, but I still don't want to record my miles. I don't want to do that. I just want to expense it. And that's when you say, tough, you're a business owner, put on your big girl pants, even though you're a boy, and get to it. Jeremy, I don't know about you. Do you use any apps to track your mileage?
I don't, but I know there's some good ones out there. I think it was Mile IQ. Isn't that one of them that's out there?
Mile IQ is great.
Yeah, I don't. I just do there are only 2 or 3 places that I go for clients just about every month. And so I know the amount of miles from there to my house, and I look at my calendar like how many times did I go there, and just log it on that way.
That's a way to do it. I know for me, like when I have to go to the UPS store to ship laptops for employees or go out to lunches or conferences, or heck, when I have to drive to Colorado to go visit my family, but I'm also going to go check in with 2 or 3 of my clients there, I also record all of those. I use, as much as I trash talk QuickBooks, their mobile app has its own mileage log, and it's like Tinder. You swipe left or right. Is it business or not? Business or not? Great ways to go. And at the end of the year, you have your mileage. By the way, for the record, I do mileage reimbursement as well. I don't want to go through the work of tracking what was a business expense and what. I'll just take my 67 cents.
And you, like I said, if you have to track it anyway, like why make it worse? And then I'm tracking, I need to collect more bills. And yeah, I don't know.
Well, and then the other thing too is like, I've got to be able to show, okay, well, this expense for gas, it was for our truck, not our minivan, right? So then I've got to keep it separate. And so I have to keep track on our credit cards of which one were business, which one were not. I don't want to do that. So easy peasy, I take the mileage. It's just not worth the administrative. Yes, you can get more money back, but I think you spend more time in administrative labor to make it happen that it's not worth it. My opinion.
Yeah, agreed.
Question 4, at what number of business vehicles must you begin to use the actual method? Is it at 3 vehicles, 5 vehicles, 7 vehicles, or 9 vehicles?
When you asked the question, 5 immediately jumped in my head. So I'm just going to roll with that. Oof.
Well done. Way to trust your gut. Yes, once a business has at least 5 or more vehicles, you must begin to use the actual method. And a lot of business owners, they don't like this. How many people in the trades, Jeremy, have we worked with that love to cut corners? Think of some of our friends that do nothing but trades. They don't like this stuff. They just want to write it all off. No, you need mileage logs to back up every single vehicle. And getting your drivers to help you get those mileage logs, it's painful. This is where bookkeeping becomes hard because those automated, you go out there and someone will do your bookkeeping for $59 a month. They're not helping you make sure that you're ready for all these expenses come year end. They're just like, nope, we're going to auto categorize transactions, done.
Clarifying question, right?
Mm-hmm.
So this is even if they are personal vehicles, but there are 5 of them that are utilized with the business, that would apply, correct?
That is a great question because I don't know of a scenario, because first of all, for you to use actuals, it has to be over 50% business use. So I'm trying to imagine the scenario where they're not company vehicles, but you have 5 of them on the books. Why would you? But I guess in theory, if you're doing it for 5 vehicles, no matter what, the rules, at least that I understand it. Jeremy, don't ask questions we don't have the budget to research.
Just things I think about, Tyler, because I've had so many people ask me, asking me about a bookkeeping question, and they're like, well, there's this vehicle there and it's on the books and whatever. I'm like, is it titled in the name of the business? No. Then why is it on the books, right? It's not the business asset. You shouldn't have it there. Do mileage, move on with life.
You can't do actuals unless it's over 50% business use anyways, and you need the backup to do that. Question 5 out of 6, so we're almost there. True or false, allowing an employee to drive a company vehicle home is a taxable benefit?
I feel like you wouldn't ask this if it wasn't true, so I'm going to go true.
Way to manipulate the test game, right? If there's the answer D, all the above, you just always select it. Yes, correct. And this is one of the reasons I left a past job that I was director of finance. We did not end on good terms. They didn't do anything unethical, but at the same time, there was stuff like this where they were letting employees drive home vehicles, and they called me a stickler for rules. And they just said, just let it slide, but also put your name on all our finances and say they're correct. Oh. This is why I left one of my last jobs, amongst other things where they're like, it's not a big deal. Just sign off on it. Yeah, if an employee has a company vehicle that they drive to and from home every day, you're essentially giving them a commuter benefit. You're letting them expense their gas. This is a company benefit to the employee. and must be reported as a taxable benefit on their W-2.
So if you're using mileage here, the calculation of miles times the rate from their place of business to their house should get added to their W-2 as additional wages.
Well, it depends. You're not really going to do this with mileage, because if it's mileage, you've already paid for all the expenses on yours. Well, I guess that's true. Like, you are contributing it to the business and deducting it. And then, yes, so as far as for how the employee compensates, there's actually 3 methods out there. I'm not getting to get into too much detail, but like some of them is like, it's $1.50 a mile, or other ways. Like there's methods they actually recommend for how to calculate it as a benefit. But most of the time when this becomes an issue, it's usually a company vehicle that's done actuals. Usually only use mileage reimbursement when it's a personal vehicle you're using for the business.
Yeah, makes sense.
Last question, Jeremy. Which of the following is not true?
Okay.
You're going to get some double and triple negatives in here. Are you ready?
Oh.
I know.
I'm not an English major. Come on, man. All right. Shoot.
Which of the following is not true? Traveling between home and the office is not tax deductible. Yeah. If you have a home office, commuting to a corporate office is not tax deductible. Traveling between 2 corporate offices is not tax deductible. Or to use the mileage method on your vehicle, you must choose it in the first year it is used for the business. Which one of those is not true?
I feel like the last 3 sound okay, so I'm going to go with the first one.
I love any reason to make sure you don't get a perfect game. I'm going to run through these real quick. So is it not true? Traveling between home office is not tax deductible. That is, in fact, true. It is not tax deductible, so it is not true. Yeah. I know, isn't this fun? Okay, so to simplify it for our listeners, essentially, if they travel from home to work, they cannot reimburse themselves mileage on those expenses. That's considered commute. That is not a business expense. If you have a home office, though, commuting to the corporate office is not tax deductible. That, in fact, is true. You cannot deduct that as well. That is not true. It is true that it is not tax deductible. So essentially, even if you have a home office, it does not count. That is still a commute, even if there is a home office. In fact, some of you are probably getting after me right now like, Tyler, if they have a corporate office, they can't have a home office. And that's a lie, because there is the administrative office exception, and we can get over that one day. But come at me, bro. I dare you. Question 3. Traveling between 2 corporate offices is not tax deductible. That is the correct answer, Jeremy. Essentially, you can claim a mileage reimbursement when traveling between 2 offices. So let's say you have a Salt Lake City location and a Appleton, Wisconsin location. As long as you travel into the Salt Lake office from home and then drive to the Appleton, Wisconsin office directly, that commute is deductible. Traveling between 2 offices, 2 locations, let's say they have 6 stores in the state. As long as they're traveling between the stores, that's good. But traveling from your house to the first one, not. Yeah, lastly,
now that you say that, I realize it. Then, and if you're making that trek from Salt Lake to Appleton, you got to stop at Waldrug.
Yeah,
that's what you got to do.
And then the last one, to use the mileage method on your vehicle, you must choose it in the first year it is used for business. That is true. You have to pick it year 1. You can't switch to it later. So get it right from day 1. People, listen, from Jeremy and I, if you have any clients and they're a simple Schedule C, just make them do mileage reimbursement. It's the easiest. They're not going to get you good details. If they're a super stickler, just tell them, hey, you're going to spend more time trying to get us all the detail we need to substantiate this in time and labor than you will get tax savings. Don't do it.
100%.
Jeremy, I think you got 4 out of 6. Well done, sir. Above average, which, you know, what your wife says about you too. Well done.
Yeah, but she's a saint.
And with that sound, it is halftime. Yes, it is the part of the show where we run over to the sidelines and take a big old bite out of an app snack. And Jeremy, dare I ask you, what are we taking a bite out of today?
So today we are talking about Guideline. So if you are not familiar with Guideline, Guideline makes it a very easy option for you to offer a retirement benefit for employees through a 401k. So something that we got into a couple of years ago now, and mostly because we're in Gusto and they are like in thick with Gusto, and we like that because everything is seamless where I can set it up, and when the employee onboards, they automatically get a request to sign up for this. And you can also set it up that they are auto enrolled into your 401k plan, which some may like, some may not, but I am a big fan of. But it just makes the whole process of offering an amazing benefit to your employees to help with their retirement planning.
I honestly love it. Like, we started with a simple IRA as the option for our staff, and there was only a couple of us on it. And while I love the small little firm we went through that was, a friend of a friend that I met in a BNI chapter once, the administrative workload to get our staff signed up was just awful. Awful.
Mm-hmm.
Love them as a company. They were great. And so switching to Guideline, to get a 401k, so we seem a little bit legitimate now. That's been fan-friggin-tastic. But then you look on top of that, I absolutely love that, like, the moment we switched over, my staff got the notification to sign up right from their phone. The fact that they can make their own adjustments to what they want to withhold or what they want to invest in, they can do it right from their phone. This thing is friggin' slick. And it's just, we've saved more in just the administrative time and labor of me and my assistant not having to do administrative work on it than what we're paying Guideline. Like, it's absolutely worth it. I mean, what's some of the coolest stuff you've seen so far?
Yeah, I mean, the ease of use is by far the biggest aspect. Like, again, it's part of onboarding within our Gusto process. It automatically comes out super easy. So that's been nice. And like you said, they are in control of it, can change it at any time. That automatically gets updated in our payroll system, et cetera, et cetera. So that, again, all ease of use, make it easy for somebody like me. And then you talked about the cost, right? Not bad at all, in my opinion, right? That it is $39 a month for up to, I think it's up to a $6,000 donation or like contribution by the organization, right? Yeah, not donation. Getting in my nonprofit world here. And it goes up $89,000 a month for up to the max of 24. And I believe there is a participant fee too.
It's either $4 or $8 per participant.
Yeah, $4 or $8 a month. Yeah. So, I mean, it is completely reasonable. I think we have 89% participation on our team. So we're getting, a $200 bill every month that this happens. But I also just checked it. And when we were talking about this, our plan's assets now have $200,000 in it. So that's like insane. A couple of years. And also, like, this is probably the sneaky part of management is that I like to go and look and see like which employees are in or not. And I probably shouldn't do that. But I feel like the ones that are in there at a decent amount or at least the minimum, like I feel better about those people and their long-term goals than I do some of the other ones that are like, nope, can't do this. And I'm just like, not a great decision. I'm trying to give you free money.
Yeah, I mean, that's the thing. We match up to 3.5%. And that's the beauty. If you do even a safe harbor plan, like we've done one, it's not your traditional safe harbor, but this one's like they get the first percent 1-for-1 match. And then the next 5% is for every one they contribute, they get a 0.5% match. So if they go up to 6, they get 3.5. I love the auto enrollment. I also love that we've built ours that it doesn't vest for 2 years. So employees are incentivized to stick around to get their full match. And if they leave before that match goes out, Guideline throws it back into, it's kind of like a prepaid account where they're still holding the money. I don't get it back, but as I give contributions to other staff, it just takes from that prepaid account and gives it to my other staff. So then I'm not paying contributions until then. I absolutely love it as both a way to give more to your employees, incentivize them to look for the future, and also a staff retention tool.
Yeah, 100%. And when you say auto enrollment, do you mean you enrolling or?
Can I get them to enroll to give money to me? Is that what auto enrollment means? I love this.
I love this idea too. Yeah, so check it out. If you're looking at a way to, building your staff and get back to them, and just like that's kind of an expectation for the labor force right now too, is you have some kind of retirement plan in place. So not a lot of ching to do it and makes it easy.
Yeah, and I mean, they've got accountant perks too. So if you start sending clients their way, they give you free stuff for a while. Mm-hmm. We've had a good experience with our reps so far. Super white glove, super responsive. They even walked us through, here's all the compliance traps of canceling your simple IRA. Here's templates for letters to get that canceled. Like, they make it easy. So give them a look if you're using Gusto like Jeremy and I do, because the same thing as I said with mileage. Reduce the administrative workload, like save time and stress there. That's been my opinion. Well, Jeremy, I've got another game for you. I wrote a couple games this week. And so before you get to throw down fast figures, which I'm already scared because I am out of practice, I've got one more game I am titling What's Up Startup. Now, we're going to talk about startup expenses for a business. And spoiler alert, I wrote this for last week's show, but we went so long, I'm jumping back in. So not all the questions are fresh off the top of my head. We'll see how this goes.
All right, let's do it.
Okay. So before we jump in, I just want to give a little, knowledge for everyone. According to the IRS, a business startup cost is an amount paid or incurred for creating an active trade or business or investigating the acquisition of a trade or business. First question, true or false? You are allowed to expense startup costs before you have your first sale in your business.
That would be true.
Technically,
What?
Technically, you are not in business, according to the IRS, unless you have your first sale. The way that they view it, yep.
What
Go
about
ahead.
all the software development companies out there that are like pouring money into all this before they have a single sale? You have to get your mom to give you $1 first and record it as revenue?
There's like research and development credits and there's other stuff you can do, but true startup costs, no, they get after you for this, that you are not in business until you make your first sale. But this is easy, Jeremy. Like if you're starting your bookkeeping biz, go sell tax advice to your cousin for $5. Like you have that, you got everything you need to start expensing your startup costs. But they're going to get after you for this. Just question one.
Dear IRS, do not audit my 2016 tax return.
I think you're past the statute at this point. Well done, Jeremy.
Good. Man.
All right. Question 2. Once you have your first sale, you are allowed to write off only up to $5,000 of all the startup costs in that first year. True or false?
I'm going to go false. Should have known that one.
Any expenses that are deemed startup costs, you only get $5,000 in year one. Yeah, anything from before that first sale. So what's supposed to happen with everything else is you throw it as prepaid expenses on the balance sheet. And question 3, over how many years must all startup costs over $5,000 be amortized? Is it 5 years, 10 years, or 15 years?
I feel like goodwill when you acquire an organization is a 10-year thing, so I'm going to go 10 years. Man.
15 years, Jeremy. Brutal, right? Brutal. So if you go over that $5,000, you're spreading out your expense over 15 years. So the good news is you still get to write it off. The bad news is you don't get to recoup it all right away, which is why get that first sale as early as you can, because then you are justified. Now, I know a lot of businesses, they're just say, whatever, I'm writing it all off in year one. But if you get caught in an audit, just know they may come back and say a lot of these expenses weren't allowable.
Yeah, and if you think about it, you would hope that you are getting better and more profitable as an organization later as you go on. So maybe that additional amortization cost of your startup costs would be more beneficial for you then than it would be now.
That's a good point. It actually might be a helpful tax strategy.
Jeremy, tax strategist?
I know.
I haven't got a single question right. I don't think we should go there.
You got 3 more to avoid the shutout. And again,
right.
I've given you true or false so far, or multiple choice.
Softball.
All right, question 4, Jeremy. True or false? Educational expenses for a new business or trade are eligible startup costs.
Oh, I have some feelings about this question, but I don't know the answer. I'm going to go with false. Okay.
Well done. So this is a tough one for people to swallow. They get really upset, but if education expenses are specifically precluded from startup expenses, otherwise, everyone in the world would write off their college degree as educational expenses to start up a business. So for those of us that may be doing bookkeeping programs or tax programs to start a new business, super sorry, folks, but according to IRS code, if you are not already in business for that specific trade, you do not get to deduct the expenses for that training. You said you have thoughts on this.
I have thoughts on this because we recently had a guest who has a wonderful training program, which I purchased in 2016. And I'm not like, well, yep, startup costs, threw it on there. I guarantee you I took that expense and put it on my business as an expense right away. And I feel like, yeah, I was an accountant, but I was not I could not be a bookkeeping firm owner without these additional skill sets, which that course helped build. And to me, for that not to be a cost of the business, like if I hadn't taken that, there's no way I would be where I am now and have the ability to do it, or I would have had to pay money to a coach or somebody else to do this. I strongly disagree with this. Danny, what's your name from the IRS? Let's go.
Daniel Werfel.
Yeah.
Well, but so here's the question then. If you can get a single sale before you sign up and pay for any programs, is it now a business expense because it's no longer startup?
From what you're saying, it is, right? So I agree with you. Like, give somebody $5 because I don't even do taxes, but I get tax questions all the time that I'm like, you should talk to a tax professional, but here's what's going on. Clearly, they shouldn't listen to me, but normally some of my advice is somewhat sound. So yeah, give them $5, tell them to do something, and then record your first sale. Wow.
Question 5, Jeremy. Things like incorporation fees, interest, real estate taxes, and R&D, research and development, are excluded from startup rules and can be expensed immediately.
You did talk, I know it's a little bit about the R&D credit, and you talked about that earlier. God, I don't feel confident in this one. I'm going to say it can be. Yes, true.
Yes. Now, R&D will be scrutinized, so you better have, backup showing that you're building prototypes or inventing something new, you're buying materials. Having lunch isn't really R&D if you're just meeting with people. Sorry.
Could that be another CPA bar, the R&D bar? And you Ooh, yeah.
I like this idea. Yeah, go back to our last episode if you need bar names. So, I mean, it's got to be crucial. I know a lot of experts that say, like, you should only go back 3 to 6 months unless you are building prototypes of stuff over years and you can show, like, hey, I spent $200,000, but here's the materials, here's pictures of what I made. Like, then, yes, you could entertain going back several years. But otherwise, like, 3 to 6 months max is what a lot of the experts I listen to say when you're getting on, like, just cost to get your, you can't go back and claim your computer from 5 years ago that's still sitting on your desk. Probably not the way to go.
Like, this is what bothers me, but you can't do the training that you may need to have the knowledge to get the parts to do the R&D. I'm
Jeremy,
I'm bitter.
At what point has anyone advocated the IRS tax code is fair or logical?
All right. Yeah. All right. Point taken.
All right. Yeah. Last question. True or false? Fixed assets can also be expensed as startup costs.
Ooh, I'm going to go false. Yeah.
Well done, sir. Yes, fixed assets are treated like fixed assets. You're going to depreciate them over time. You put them in service as of the date of the first sale, or unless there's other things. There's stuff like if it's a rental business, like a rental piece of real estate, you can actually call it in service the day it is available to rent, and you have a listing showing that it's out there as rentable on a site. So there's different things you can do as to when it's placed in service. But yeah, you're going to treat it like a fixed asset.
So if I have a doghouse that I plan on renting out, whatever, I need to redo it. Let's do it.
Depending on the city, you probably could get $1,000 a month for rent.
Oh, yeah. Yeah, I believe that. Love it.
Jeremy, you turned that around, starting off going 0 for 3, but finishing 3 for 3. Well done, sir. 3 out of 6, right in our wheelhouse.
Welcome to Fast Figures. 10 questions, 1 minute-ish. All answers are numbers. The game starts now.
Well, after a hiatus where we've had some wonderful guests, I haven't been able to put you in the hot seat. So I'm a little excited to do that this time. And over the weekend, the New York Times had a wonderful article about everybody's least favorite currency, the US penny. So we're going to do a little bit of a deep dive on the penny with today's Fast Figures. Are you ready, Tyler Otto?
No, not confident at all, but hey, let's go for it.
All right, put some time on the clock. Within 20%, how many pennies are estimated to be in existence in the U.S.?
8.2 billion.
Again, within 20%, how much would this be for every person alive in the U.S.?
$600.
In the 2017 movie adaptation of Stephen King's classic horror fiction novel, It, how many balloons does Pennywise use to lure children into its clutches?
I got a balloon for you. Don't you want a balloon?
I'm going to say 3.
How many pennies does it cost the U.S. Mint to make 1 penny?
2.
How many pillars are there shown in the depiction of the Lincoln Memorial on the tail side of the penny?
4.
In the popular TV show program Big Bang Theory, how many times does Sheldon knock on Penny's door every time he visits?
6.
Within 10%, how many pounds does just $100 worth of pennies weigh?
15.
If you are chiming in to give someone your opinion, how many of your cents are you providing?
2. Well, for me, they only value it at 1, but most people 2.
You're probably accurate there. In what year did Canada eliminate its penny?
And they went to Monopoly money, right? Like the loonies and toonies. I'm going to go 1987.
How many parts of the human head is Penny Lane in based on the classic Beatles tune?
2?
All right.
Dang,
Nice
that Beatles
work.
one. It's like I can hear the song in my head, but I don't know the lyrics well enough.
All right, well, we'll get to that. Let's go back and review some answers here.
Brutal.
Yeah,
Did not go well.
A little bit. I love it. All right, so within 20%, how many pennies are estimated to be in existence in the U.S.? You said 8.2 billion. No, it is 240 billion.
Wow.
That's a
Samsonite, I was way off.
Yeah, you're way off. And then what does that equate to per person in the U.S.? You said $600. No, within 20%. Nope, $7.24.
Really?
So
Huh.
I don't think I'm going to be able, in the short confines of this show and not using an Excel table, to figure out how many people you think are in the U.S. that 8.2
You
billion
assume
pennies.
I did math. I forgot that there's like 3. At no point during that question did I think, oh, there's 300 million people in the U.S. I should do the quick math of all that. No, I just threw out a number.
And it shows. No, all good. How many pennies does it cost the U.S. Mint to make a penny? You said 2. It is 3.
Wow.
Yeah. So the government, so it's funny because they lose money on these, right? So every
Yeah.
penny they make, they lose 2 pennies. But they make money on pretty much all of the other coins, the dime, quarter, 50-cent piece, all of that, right? And then this income is called seigniorage. Seigniorage? I don't know if I'm saying that right.
Seigniorage.
It's actually used to help finance the national deficit.
Interesting.
Any guess on how much the U.S. government made in that last year?
300 million people.
Ooh, it was close. $433 million the government made from the production of the coins to the sale to the mint.
I would not have guessed. No.
Treasury. Yeah. Then, how many pillars are shown in the depiction of the Lincoln Memorial in the back of the penny?
I mean, it's such a small space. It either has to be 2 or 4.
It is 12.
What?
Who's got a penny? Pull it out of your pocket and look at it.
I don't have a penny.
12.
Gotta go rid my.
Neither
my
does
kid's piggy
anybody
bank.
else, because everybody hates the penny.
Which, if we had a client, I was like, well, I've got this product. It costs me 3 times more to make it than what I get out of it. But, we've been doing it forever. Might as No, I'd be like, discontinue that right now.
Oh, yeah, stop. Why has this not stopped yet? And that was the article, if you want to check it out, was actually really cool and in-depth and had a lot of history in it. But pretty easy, smart thing to do, which means why we cannot have a single politician that would actually make it happen. Ugh. Bonus points?
Okay.
How many pillars are in the actual Lincoln Memorial?
I feel like you're just going to trick question me, so I'm going to go 16.
Nope, 36. And which I think makes sense if you think you're looking at the front of it, and then there's only 3 sides, right?
Yeah.
But actually I don't know if they use that in the architectural drawings of it, but it was the number of states that were in the Union when Lincoln died. It was 36 states, so they made 36 pillars in the Lincoln Memorial.
Okay.
Yeah. I'm going to guess from the answer to our next question here that you are not a Big Bang Theory fan. True or false? And I think we've discussed this. You have an affliction. You have an affliction. What is your affliction?
Well, okay, so it's hereditary first and foremost, because my mother pointed it out to me, and ever since I've noticed it, I can't stand shows with laugh tracks. Like it just kills me. Like, and maybe I've just ruined some shows for some of our listeners, but when I hear a laugh track, it grates me. So, I can do Modern Family. I can do, The Office, Parks and Rec. Those are all right up my alley. But a show that tells me when to laugh, I just can't do it. So, yes, I've seen clips of Big Bang Theory. I think it's hilarious. But then I cringe at the laugh track.
At the laugh tracks, yeah. A similar story, what my mother ruined for me was the squeaky shoes during basketball games. I had never heard them. And then she's like, I can't watch this. All I hear is the squeaky shoes. And now every time I watch basketball, that is all I hear is the squeaky shoes.
Tune in next week for Tyler and Jeremy to ruin child nursery rhymes.
That's right. So how many times did he knock on our door? I would have accepted 3 or 9 because every single time he goes to his door, it's penny, penny, penny.
Penny, penny, penny.
I split the difference on your answers.
You did, yes. Both of wrong. Totally wrong, right. Within 10%, how many pounds does just $100 worth of pennies weigh? You said
no idea.
15 pounds. It is 55 pounds. So we spoke on a prior episode that what are pennies made out of now? It's not copper. I think they have a copper plating on it.
It's like...
You asked the question for the record.
I did. My brain's fried.
They're actually made out of zinc now, right?
There you go.
And that changed in the 70s because people were using them for other things. Like the General Electric company was drilling holes in them and using them for washers because it was cheaper than them actually buying washers. And at one point, McDonald's paid customers $1.15 to them, bring them 100 copper pennies. So the government saw that, said, oh no, we need to put a stop to this and change it to a cheaper material or less useful material in zinc.
That's brilliant. I love it. I love the ingenuity of people too.
Next one. If you were chiming in to give someone your opinion, how many of your cents are you providing?
2 cents.
Here's my 2 cents, worth 1. In what year did Canada eliminate its pennies? You said 1987. Incorrect, sir. It was 2013.
Oh, really? That recently?
Yeah, it was that recently. It was only like 10 years ago. But here's what intrigued me about this, and now trying to bring some accounting in here for our accounting friends, is that if you do an electronic transaction, like an ACH or a credit card, whatever, you do get charged the pennies. So if you go in and something is $2.11, you swipe a card, you pay $2.11. If you pay in cash, then you're only paying $2.10.
Do they round down all the time, or?
Normal rounding rules apply. If it's 2 or less, it goes down. 3 or more, it goes to 5. 8 goes to 10, etc.
I mean, it's fine by me. I mean, that makes sense. You wouldn't change it. It's like your investments, like you go log into your Charles Schwab or whatever, or your Guideline account. You're seeing your investment down past, the hundredths sometimes. I'm totally fine with that because why not?
Right. And if the IRS can round everything to $1, why can't we get rid of at least the pennies for all the normal transactions?
100% agree.
You're just thinking how much easier that would be with your tax software. Can you imagine if you had pennies in your tax software?
Oh, it'd be awful.
Oh, God, that'd be awful.
But what I do love is my tax softwares will realize it's ingrained in me, and I'll still enter the decimals when I'm transcribing. And it'll be like, cool, glad you entered that. We're just deleting it.
Yes, it's gone now.
It lets me do it and then says, yeah, but no.
I love it. All right. Last one. How many parts of the human head is Penny Lane in? Based on the classic Beatles tune, Penny Lane, you're in my ears and in my eyes. 2. Nice work.
Thank you, sir.
Oh, I don't think I kept track of this well because I was holding up my end of the bargain, but I believe you got 3 out of 10.
You know what?
Not bad.
Let's just roll with it. I mean, that's what my wife rates me. It's good. It's a safe space for me. 3 out of 10.
Yeah. So thinking of this, so let's pretend U.S. does abolish the penny. What are the accounting implications? Is there more electronic transactions because you can potentially pay less, or you may have to not?
I mean, more businesses try and go cash-based only. I mean, the till drawer now has a little bit more space for you to hold other things. I don't know if there's a huge accounting implication because it's such small dollars. All the transactions that matter, we don't care.
Yeah. I say that to upcoming bookkeepers too, and I'm like, if you are off by pennies, no one's going to care as long as your bank reconciliation is right. That's got to be the penny. Everybody else, nobody cares.
Yeah, and if the bank rec doesn't reconcile to the penny, but there's 3 pennies off, you write that off to the P&L and get it to the penny, and no one cares about those 3 pennies you wrote off.
Yes. And there's no like gain loss from rounding, I wouldn't think, because like your like I would assume like the point of sale systems would understand that, and you would just like have a lower sale and your margin would be less or more based on it. I don't know. I didn't think. I'm trying to feel why we can't do this, Tyler. Like, what's the rule?
Well, that does bring in the question, if your point of sale, if you bring in, $10.02, they pay by credit card, your clearing account's going to be perfect on credit card. But if not, you're going to have shrinkage of 2 cents. So your P&L is going to need an extra line item for that rounding of up or down on all these transactions. So yes, you would have, I guess, one extra offset to your clearing line, shrinkage, I guess.
Yeah.
Or
nobody likes shrinkage. Do you want to know what the worst thing that would come out of this if they got rid of that?
No, hit me.
Yeah, you're going to hear it anyway. Tyler Otto no longer gets to say this is free 99 because there would be no free 99s. It would be free 95.
No, it'd be free 1. It'd round up. Normal rounding rules apply.
It doesn't roll off the tongue as well at all.
Bummer.
And with that, it is our time for the winner of the week. And despite the performance of our last segment here, I have decided to make Tyler himself our winner of the week for a couple of reasons. First of all, got your golden ticket to QB Connect in the fall.
Intuit Connect.
Oh, yeah, they're right.
And I'm bringing a hot date.
You are.
He's bald and he's from Wisconsin, folks.
Yeah. And we have the king size vibrating bed suite all set up and ready to go.
Yep. No, it's all reserved. It's all taken care of. So Jeremy and I will finally be there. It's like they went through the entire list and I guess, there was no one left. So like, fine, we'll let this guy in.
So not previously discussed, but if you are going as well, please come and find us, say hi. Maybe we'll have some merch. I don't know.
That'd be a good idea. Yeah, let's try that.
Let's figure that out. And then for the second reason, you are in a speaker lineup that is pretty impressive, sir, including your peers of Mike McAllowitz and Hector Garcia. No, I said it, peers.
That's a bold statement right there. That's like saying you go to a concert and there's the headliner and then 2 decent bands. And then there's the opening act that all they get is like an acoustic set at the very front. Like that's me in this barrage of Ron Baker, Mike McAllowitz, Hector Garcia. But you know what? I'll take it. You got to start somewhere.
That's right. And it's a Successful Bookkeeper event, right?
Yep. Successful Bookkeeper Summit. We'll put the link in the show notes because I can't open another browser tab right now without breaking my computer. But yes, we'll put the links out there. So yeah, and the live event is free virtual. If you want to watch it later, it's paid. But if you want to join live, register. It's actually a really cool speaker lineup, plus me.
For all you Tyler Otto fangirls out there, if you go get enough. I love it. All right. And then loser of the week. I think us accountants, so I don't know if this is right, but we had a good friend, Madison, who recently posted in one of our Bookkeepers Gone Wild channels that QuickBooks Payments is now assessing a monthly fee of $20 on top of the ACH, like just to use it, on top of the ACH charges, which have a maximum of $20 per transaction. It was legit. She's a very intelligent person, so I assume this is really happening at some point. I'm just slower or don't use it as much as she does maybe, so they're not trickled it down to my level yet.
They're adding more fees because, they got to report to their shareholders. We found another way to nickel and dime. But right. The thing is, you tried to do your due diligence. She sent screenshots. We couldn't find backup for this anywhere. It's like they're sneaking it under the radar and you have to go through support to get documentation of these added fees they are doing. Second, Jeremy, you just outed the Bookkeepers Gone Wild chat. Like the first rule of that is it's Fight Club. You don't talk about that. And you drop it on a podcast? What the heck is wrong with you? We may have to rethink your entry to the club. We will be discussing that in our King bedroom at QuickBooks Connect.
Oh, I got nothing. Unacceptable.
Jeremy, last thing to bring up for the week before we have to call it. But we do have another backhanded 5-star review. Dale, I regale you with one more.
Yes.
And I'm going to go quick because I know you got to pick up the kids today. But a unique take on accounting by M. Stewart. Martha Stewart apparently is writing in. It's truly a unique experience, one that certainly you'll never forget. Their approach to accounting is, well, let's say it's as innovative as trying to calculate taxes with an abacus in the digital age. Tyler and Jeremy have mastered the art of making accounting sound more thrilling than watching paint dry. It's impressive how they managed to take such an inherently exciting topic and maintain such a consistent tone throughout each episode. Their insights are as refreshing as a lukewarm cup of coffee, and they have a remarkable talent for ensuring that listeners stay on the edge of their seats, ready to hit the pause button at any moment. The podcast production quality is as consistent as its content. The audio levels fluctuate just enough to keep the listeners on their toes, and the occasional background noise adds an authentic touch, making you feel like you're right there in the room with them, sharing in the experience. It's quite a feat to achieve such a natural atmosphere. Overall, the Unaccountable podcast is perfect for anyone who enjoys the subtle challenge to their attention span. If you're looking for an experience that's both enlightening and humbling, this podcast might just be for you. After all, not everyone can boast the ability to make listeners question their life choices like this one does. 5 stars, Apple review.
Wow, that was intense.
It was.
That was some work there. Oh man, I feel like we're gonna have to, like, when we finally milk this cow for all it's worth, like, rate them and send winners something. This one is awesome.
M. Stewart 310, thank you. If you would like your backhanded 5-star review read on air, head on over to Apple Podcast or Podchaser, leave us your backhanded 5-star review, and we will gladly add it to our lineup of comments here on the episode. Beyond that, Jeremy, this is our show. And until next week, sir, I think we might be having another guest. I don't even know at this point, but fun to be back, just doing it, you and I. Wait, I shouldn't have said that. Bye.